Look at the number on your screen. $315 trillion. That is the current price tag on planet Earth. That is the combined debt of every government, every corporation, and every household in existence. To put that into perspective, it is 3 times the size of the entire global economy. If you sold every building, every factory, and every acre of land on Earth, you would still be broke. Here in the US, we are staring down the barrel of $38 trillion alone. Every child born in an American hospital this morning took their first breath owing the system $100,000. It is the same story in Tokyo, in London, in Paris. But stop. Turn off the noise for a second. Ask the question that the news anchors are too afraid or too stupid to ask. The question that makes the math fall apart. If every country is in debt, who exactly do we owe? Think about it. We don't trade with Mars. We didn't borrow cash from aliens. There is no intergalactic bank collecting payments. So where did the money come from? And who is standing on the other side of the ledger waiting to collect? The answer is going to terrify you. The world doesn't owe money to anyone outside. The world is trapped in a self-cannibalizing loop, a closed system. But this isn't an accident. It's not because politicians are incompetent or because they spend too much on bridges and wars. That's just the distraction. That is the puppet show. This system was engineered, deliberately, ruthlessly. It was built by 4 men, 4 architects spanning 3 centuries. They never met. They lived in different eras, but they shared the same blueprint. They built a prison without bars, a system where the debt can never be repaid. Why? Because debt is their asset, and the interest you pay, that's just the rent you pay to exist in their world. Today, we are opening the biggest case file in human history. I'm going to show you the faces of the men who rigged the game before your grandfather was even born. Let's go back to the crime scene. London, 1694. Before this moment, debt was simple. It was honest. A king needed money to wage war. He borrowed gold from a merchant. If he won the war, he paid it back with loot. If he lost, he defaulted. The king was humiliated. The lender lost his shirt, but the debt died. The system reset. It was brutal, but it had a mathematical end. Enter William Patterson. Patterson wasn't a king. He was a Scottish merchant with the eyes of a shark and a mind for schemes. He looked at the English crown and he didn't see a king. He saw a desperate junkie. King William III was broke. He was losing a war against France. His treasury was empty, and nobody would lend him a dime because the crown had a bad habit of stealing from its creditors. Patterson walked into the palace with a proposal that changed the course of human civilization. He offered the king a deal that sounded like it was written by the devil himself. He said, "I will gather a syndicate of merchants. We will give you £1.2 million in gold. A fortune." The king asked, "And when must I pay it back?" Patterson smiled. "That's the catch, Your Majesty. You never have to pay me back. You keep the gold. You never repay the principal. You just pay me interest, forever, 8% a year." But the king was broke. He had no income. So where does the interest come from? Patterson pointed out the window at the peasants, at the shopkeepers, at the people. "Tax them," he said. "Your debt is their burden." To run this scheme, Patterson created a front company. He gave it a patriotic name to make it sound official, the Bank of England. But make no mistake, it was a private bank, owned by Patterson and his friends. Here is the mechanism. It is brilliant and it is sick. 1. The merchants put gold into the bank. 2. The bank hands it to the king. 3. The king taxes the citizens to pay interest to the bank. 4. The bank splits the profit with the merchants. The principal is never touched. The debt never dies. And the king's IOU? Patterson convinced the crown to let him print paper receipts for that debt. Those receipts became banknotes. They became money. In 1694, William Patterson invented the engine of perpetual debt. Debt stopped being a problem to solve. It became a product to sell. Patterson died 3 centuries ago. But that original loan? The British government is still rolling it over today. But Patterson just poured the concrete foundation. The next man, he built the steel walls. Fast forward to the 1800s. The Patterson model had a flaw. It was local. If the British government collapsed, the British debt died with it. It was still risky. Nathan Rothschild, the strategic genius of the legendary banking dynasty, decided to industrialize that risk. The Rothschilds had a superpower that was worth more than gold: information. 5 brothers, 5 capitals: London, Paris, Frankfurt, Vienna, Naples. They built a private courier network that was faster than any army and more efficient than any government. The year was 1815, the Battle of Waterloo. The fate of Europe hung in the balance. If Napoleon won, the British bond market would go to zero. If Wellington won, the bonds would skyrocket. Nathan Rothschild was standing on the floor of the London Stock Exchange. His courier arrived with mud on his boots. Nathan knew Napoleon had lost a full 24 hours before the British government did. What did he do? Did he buy? No. He sold. He started dumping British bonds, throwing them away. The market saw the great Rothschild selling. They assumed England had lost the war. Panic. Chaos. Everyone sold. The price of British debt crashed to near zero. And then, in the shadows, quietly, Nathan bought it all back for pennies. When the official news of victory arrived the next day, the bonds soared. Nathan Rothschild didn't just make a profit. He effectively owned the British debt market. But his real innovation wasn't the trade. It was the web. Rothschild turned sovereign debt into a tradable commodity. Suddenly, an Austrian aristocrat could own British debt. A French bank could use British bonds as collateral for a German loan. He weaved the economies of Europe together. He created a new rule of physics for finance, too interconnected to fail. A country could no longer just default, because if England stops paying, the French banks crash, the Austrian wealth evaporates, and the German industry halts. Rothschild locked the governments together. He handcuffed them to the bond market. Power shifted that day. It left the palace, and it moved to the exchange. Governments became hostages. They had to keep borrowing, and they had to keep paying, or the entire web would snap. But the Rothschild system still had a flaw, a physical limit. Gold. You can only lend as much money as you have gold in the vault. The leash was tight. J.P. Morgan, the king of Wall Street, hated that leash. He wanted a way to buy debt without limits. He wanted a hose that never ran dry. The year was 1907. The market crashed. Morgan had to bail it out with his own money. He locked the leading bankers in his library and forced them to sign checks to save the system. He saved the economy, but he realized he couldn't do it forever. He needed a bigger weapon. He needed a central bank. But Americans, they hated central banks. They remembered that their founding fathers warned against them. They knew it was a scam to benefit the rich. So Morgan and his cartel pulled off the greatest heist of the 20th century. 1910, Jekyll Island. A secret meeting. It was so secretive that the men used code names. They told the press they were going on a duck hunt. For 9 days, in a private club off the coast of Georgia, they wrote the blueprint for the Federal Reserve. They branded it Federal to make it look like government. But let's be crystal clear. It is not federal. It has no reserve. And it is not a bank. It is a monopoly. 1913. The Federal Reserve Act passes. The infinite debt engine is turned on. The mechanism changed forever. The US government needs cash. They write an IOU. The Fed needs to buy it. Do they use gold? No. They press a button. New dollars are created out of thin air. The government spends it. The taxpayers owe the interest. Before this, a lender needed to have money to lend it. After Morgan, the lender could create the money to lend it. The physical limit was gone. US debt went vertical, because now there was always a lender of last resort ready to print cash to keep the game going. Morgan built a perpetual motion machine for extracting wealth. He handed the politicians a credit card with no limit, and he handed the bill to you. By the 1970s, the trap went global. Developing nations, Mexico, Brazil, Argentina, binged on cheap dollars. They borrowed heavily to build infrastructure. But then inflation hit. The value of the dollar started to wobble. Enter Paul Volcker, chairman of the Fed, the man with the iron fist. To save the dollar, he decided to choke the world. 1979. He jacked interest rates to 20%. Imagine you have a mortgage, and suddenly the bank triples your monthly payment overnight. You aren't just broke, you are dead. Mexico defaulted in 1982. Then Latin America followed. The Third World Debt Crisis began. By the old rules of capitalism, the US banks who lent that money, Citi, Chase, Bank of America, should have gone bust. They made bad loans. They should lose their shirts. But Volcker said, no. He weaponized the IMF. The IMF stepped in. They lent Mexico billions of dollars. Was this charity? Was this to build schools or hospitals? No. The money went from the IMF to the Mexican government and immediately back to the New York banks to pay the interest. It was a money laundering circle. But the price? The IMF imposed structural adjustments. Translation: sell your national resources cheap, privatize your water and electricity, cut funding for your poor, open your markets to American corporations. Volcker taught the world a brutal lesson. When you can't pay, you don't go bankrupt. You get owned. Debt became a tool of geopolitical conquest, a way to strip mine a nation without ever firing a single bullet. Patterson built the trap. Rothschild locked the door. Morgan removed the ceiling. But Volcker turned the debt into handcuffs. Step back. Look at the full picture. 4 men, 4 layers of the trap. Patterson made debt perpetual. Rothschild made it inescapable. Morgan made it infinite. Volcker made it a weapon. The result? 38 trillion in US debt, 315 trillion globally. You hear these numbers on the news, and they sound like a crisis. You think the system is broken. You think they are panicking behind closed doors. Wrong. To BlackRock, to the bond kings, to the Federal Reserve, this isn't a crisis. This is an asset. Every dollar of that debt is an income stream for them. Who pays it? You do. You pay it through your taxes. You pay it through your labor. And most importantly, you pay it through inflation. Inflation isn't the price of gas going up. Inflation is the value of your work going down. It is the invisible tax that keeps the system solvent. They print the money to pay the debt, and every dollar they print steals a fraction of the value from the dollars in your savings account. The system is designed to never end. Think about it. The US dollar is a debt-based currency. It comes into existence when debt is created. If the US government paid off its debt tomorrow, the money supply would vanish. The economy would stop. We are living in a terrifying paradox. Our economy only survives as long as we remain enslaved to their debt. You can't work your way out of this trap. You can't save your way out in paper currency, because that currency is just a receipt for the debt that imprisons you. The first step to escaping the prison is realizing you are in one. 315 trillion isn't just a number on a screen. It's a measure of how much of our future has already been stolen. They call it modern monetary theory. They call it global finance. I call it the greatest heist in history. I'm the finance detective. Class dismissed.